in terms of looking ahead, there's probably 5 points that I wanted to raise today, both in terms of risks and opportunities, and some of which I think has been touched on as well by previous chairs. I think the key focus is on margins in a high cost environment. Depending on your business model in the industry that you operate in, it could be energy costs. I think we are reading that energy costs are forecast to expand by 30% next year. Fuel, of course, fertilizer if you're in the farming industry, and of course interest expenses in a rising interest rate environment. So I think margin impact will be the key rather than a sales top line focus. And for those that are importing, the currency I think is extremely important. We're seeing it at 62 cents today, US Aussie. So if you're an importer, which obviously importing goods adds to that inflation because you're importing at a higher cost, do manage your currency as best you can, take advice and see what you need to do there. I think the second point that I'd like to touch on apart from margins is valuations. And understand your valuation, or at least have a broad range. Look at the key levers that you can address to maintain earnings or improve your valuations, whether that's margins or costs. And as touched upon by Steve, we've already seen that in the public markets, and it's moved to the private markets. It's a little bit opaque because we don't have currency, but look at that from a positive perspective. I think I approached it similarly to Steve. See what you can do in terms of how you can capitalize on this. And should the economy move to a hard landing, I mean, today's Fin Review outlined that the RBA is not looking to in a rush to reach its towards a neutral interest rate of 3.5%. But assuming we do move into a hard landing, what can you do in terms of your competitors, projects that you might look to expand on, and how can you capitalize on that aspect? If you're in a better position, could be staff, could be clients, work through that. And the last point that I'd like to make is scenario planning. Look, we just don't know how things will play out in the next 12 months to 3 years. So have a look at, a steady state scenario and a downturn scenario. So look at the macro and the global factors. We all know there's a war in Ukraine, and unknowns, weather events, floods. You just look at Florida, you look at Newcastle, and we all know iceberg lettuce was at $12. So, and you might look at that and say, well, it impacted even businesses like KFC. They moved away from lettuce to cabbages. So you just don't know where the knock-on effects are from a weather event. So these are sort of things that are unknown. All you can do is scenario plan, and then make sure you have sufficient cash or undrawn facilities. Stay close to your bank if you are leveraged in a higher interest rate environment. Look at your clients and stay close to them in terms of projects and what they're looking to do, and of course your staff. And by all means, make sure you're well insured in this current environment, including cyber. The last point is the dashboards. Make sure you have digitized your business so that you can make decision-making that's very timely and current in a changing and volatile environment. That's all from me, Donovan. Thank you.